We're going to stay on the subject of infrastructure. Brookfield Renewables is a financier behind the construction of electricity generation around the world. And of course, it is seeing what you might expect, a major tailwind from the growing use of AI. Brookfield recently signing a deal with Microsoft to invest over $10 billion on renewable energy capacity. That will be to power the data centers that Microsoft is putting up. Joining us now is Teskey. He's Brookfield Renewable Power and Transition CEO, also president of Brookfield Asset Management. And if you don't know, that's a global alternative asset manager, about $925 billion in assets across renewables, infrastructure, real estate, credit, and, well, a lot more. Connor, great to have you. Would love to just start off on the subject of the day. You heard the Secretary of Transportation talking about infrastructure. You certainly are financing and putting up a lot of, for example, electricity power generation. How much do you think about it? And give me your thoughts about today's outage as a result of this content upgrade, so to speak, from CrowdStrike.
Today is a great example of our world is getting increasingly more digitized and more interconnected. And that is fueling a really major investment theme across our business, which is the huge amounts of capital flows that are going towards increasing the resiliency of supply chains, the onshoring of critical goods and services. This is an investment theme that we've been investing in for years at scale, and one that we think has years to run going forward. And shocks like today really reinforce that point.
Yeah. Well, I want to talk about something we have been mentioning many times here on air, which is the growing need for increased electricity generation as a result of AI usage and the growth of data centers. You know, just put it in some perspective for our viewers. How much demand for power is there going to be as a result of the addition of AI around the world? What kind of numbers are we talking about that's going to be needed to help build the grid?
So let's come at it from this perspective. Today, as Brookfield, as one of the largest owners of data centers around the world and one of the largest owners and managers of renewable power generation, we have a unique vantage point into the capital flows and the growth opportunities in providing critical inputs as the largest tech companies around the world look to grow their AI and cloud service businesses. And the demand we are seeing is tremendous. It's demonstrated by our transaction with Microsoft, where we'll look to invest $10 billion to build out low-cost, clean power for them, which will directly provide input and growth runway into data centers that will be used to grow their AI capabilities. And it's really the scale that should jump out. We're seeing demand from tech companies for green power increasing at a run rate of about 50% a year right now.
Yeah, well, a lot of those companies, such as Microsoft, have significant carbon reduction targets. But I wonder, Connor, are they going to be able to not just meet those targets, but are you going to be able to, and will the industry be able to meet the demand that is coming on, given it seems to be somewhat unprecedented in terms of the rates of growth over a short period of time?
The important thing to recognize here is that the growth that we have seen in renewables over the last 4 or 5 years, and the growth that will continue into the future, is primarily driven by the fact that renewables are the cheapest form of bulk electricity production around the world. They are the cheapest way to produce a critical input that is increasingly growing in demand. The fact that the economic option is also the clean option just throws additional support behind that growth trajectory. So we will continue to see as much renewables be built across global grids as possible, because that's driving decarbonization, that's driving lower cost energy, that's driving energy security all at once. But the limitation is going to be things like grid connection and permitting. That being said, we continue to see the growth trajectory accelerate. 2024 will be bigger than 2023, and so on and so forth. So we do see the capital flows only going one direction.
Yeah, but again, I guess I come back to, will they be enough? You know, some people throw around a $100 trillion number. Now, that's over a longer period of time that needs to be invested to meet this demand. I mean, is that a number that makes sense to you?
That is a number that makes sense to us. That is the scale of opportunity here. And what's important to recognize from the stat you just shared is the amount of capital that needs to go into these trends of decarbonization, digitalization. It, in many cases, outstrips what is available from public markets or even governments. And therefore, it is a real opportunity for scale providers of private capital to step into that void and deploy at scale and at very attractive returns.
Yeah. Connor, something else we're talking a lot about and will in the coming weeks, of course, is the coming election. Right now, it appears that former President Trump is poised to win that presidency again. Who knows? Things can change. Also, with the potential Trump presidency comes the possibility of rolling back some of the provisions of the IRA. You're in renewables. You're spending an enormous amount of money there. There are benefits, I would assume, that have been attributed in your business to the IRA. How concerned are you about that?
The important thing here is today across our business, what we see is the demand for green power, the demand for other decarbonization solutions. The energy transition is really much more of a corporate pull than it is a government push. What we like to say is the trend line on energy transition is being driven by corporate demand. The ebb and flow above and below that trend line is driven by government policy. And therefore, regardless of which party is in power in the United States or other core markets around the world, we do continue to expect just an acceleration of capital and continued growth in this space. We do expect the impact to be relatively marginal.
You do, even if provisions get rolled back. And I mean, I can also imagine the CHIPS Act. Again, you've been a key financier of fabs, for example, for Intel, which is a key beneficiary of the government's attempt to bring home and create more of a domestic chip-making industry. You're not concerned?
No, and I go back to this point that it is really corporate demand that is driving the need for these inputs and the need for growth in these industries. Regardless of who is in power, corporate demand for clean, low-cost electricity is going to continue to increase. It is a critical good that is going to be required in increased quantities regardless of who is in power. And because it is the low-cost player, it will be able to continue to grow and preserve that primary solution position.
Yeah, and back to sort of the bigger question that we've been entertaining here. Do you think that the continued construction of data centers to power the new chips that power generative AI will have to slow in some way as a result of not being able to have the power available that they need?
There is no doubt that at one point the growth in data center demand was limited by data center capacity, and today the most pressing bottleneck is securing power to support the growth in those data centers. The market is reacting. Our business, for example, is increasingly tilted towards providing that power under long-term contracts to the hyperscalers, those large, fast-growing tech companies around the world. Are we going to see data center demand slow down and data center demand, construction demand slow down? We don't think so. We think this is a trajectory that has years and perhaps decades still to run.
All right, well, we'll be watching it closely and certainly appreciate your taking some time. So thank you, Connor.
Thank you for having me.